Hello. Okay, I'm going to just try and share one more time there.
Okay, I've got you now. We have everything. I've share functionality.
Okay, you're on there live. Thank you, Dennis.
Excellent. So we're good to go, yeah?
We're good to go.
Okay, Stephanie, thanks a million for everything, for setting this up. A Teams call wouldn't be a Teams call if there weren't some technical issues trying to get it up and running. So nothing new on that side. But anyway, good morning, everybody. My name is Dennis Breen. I'm a member of the Revenue Commissioner's Personal Division. And I suppose in terms of this presentation this morning, the main focus and purpose behind it is this. When PAYE modernisation was launched, the focus from the 1st of January 2019 was to ensure that all employers were fully au fait and up to speed with all of the requirements under PAYE modernisation. Excuse me. Now, in the last couple of years, we've moved on from that process. And our principal focus now is to ensure that employees are in a position to be able to claim all of their entitlements. In the recent days, you may have seen the Minister for Finance and the Chairman of the Revenue Commissioners launch basically a process whereby we're encouraging people to use my account to claim your entitlements, etc. I'll try and share here, Stephanie, if you like, if you want to stop sharing.
Please, thank you.
I'll try and. Does it work?
Excellent.
Okay, that's coming through for everyone. Okay, look, I know we're tight on time, so I'll launch straight into this. The purpose of this presentation is A, to give you some background on how the PAYE system works for employees, how employees are taxed, and all of the various different strands and responsibilities that both employers and employees have in terms of managing the employee tax affairs. Then I'll move on into a brief overview of my account and what you can do in there, because there's so many other different things you can do there aside from being a PAYE employee. Then in the next three sections, I'll talk to you about how to obtain your employment details summary, which is the document that has replaced the form P60. Then I'll be talking to you about real-time credits, which is a facility where you can claim certain tax credits in year. In the past, you would have had to wait until the end of the year to do that. So this allows people to claim in a much more up-to-date and speedy process. Then we'll talk briefly about the end of year process for employees. That is the traditional method where people come in at the end of the year, gather up all the receipts from various different expenses and submit an income tax return in the hope that ultimately a refund will be sent by revenue. I then want to talk very briefly about the rent tax credit. That's a new tax credit that was introduced by the Minister for Finance, and it's been in place now for over a year. So just to try and encourage people to claim that if they're entitled to it. And we'll wrap up then with some guidance on where to find information on the Revenue website, and we'll have some time for some questions and hopefully answers from me at the end. So to kick off, PAYE for employees. This is just a brief background of how the system works. So first of all, what is a tax rate band? A tax rate band basically is that your income up to a certain limit, known as a rate band, is taxed at a standard rate of income tax, which is currently 20%. And any income you have above that limit is taxed at the higher rate of tax, which is currently 40%. Now, you don't get your tax rate band upfront in a lump sum at the start of the year. It's averaged out across the number of paydays that you have in the year. On screen here, you will see the rate bands, tax rate bands for the current and the previous 4 years. I'm not going to go into in any great detail. You can find this information on the Revenue website, but this gives you guidance on how much of your income will be taxed at 20% based on your personal circumstances. In terms of tax credits reduce the amount of tax that you pay. So you must actually have a tax liability in order for you to benefit from tax credits. Tax credits are not refundable. However, by having certain tax credits, you may increase the likelihood of you being entitled to a refund. And the classic example there is that if you claim health expenses at the end of the year, that increases your tax credits and thereby increases your entitlement to a refund of tax. Every individual is entitled to personal tax credits. And then based on your personal circumstances, you may be entitled to additional credits, such as the employee tax credit, the home carer tax credit, or if you're 65 or older, the age tax credit. On screen there, you will see a list of some of the more common tax credits. Now, again, I'll be sharing these slides after the presentation, and you'll be able to click on any one of the links there to access more detailed information and guidance on how to make a claim for any one of those credits. Certain tax credits, when you're making a claim, Revenue will ask you to provide additional information in support of your claim. And those tax credits are the incapacitated child tax credit, where we will ask you for certification from a medical practitioner in support of your claim. Then tuition fees, we will ask you for a receipt for the fees paid, and nursing home expenses where the claim is made as part of a health expenses claim. We will ask you there for verification from the nursing home, of the amount of the fees, etc. Moving along to tax reliefs. Tax reliefs, unlike tax credits, tax reliefs can reduce the amount of your income on which you pay tax. So tax reliefs are deducted from your income before tax is applied. And some examples of tax reliefs are employing a carer, and probably the most common one, which is pension contributions. So pension contributions are, if you were paying into a pension fund through your employment, that contribution to the pension fund is deducted from your gross pay before tax is applied. Also important to point out is tax reliefs are granted at the employee marginal rate of tax. That is, if you earn sufficient income that you're taxed at 40%, the tax relief will be granted to you at 40%. Otherwise, it'll be granted to you at the standard rate of tax of 20%. Just some examples of how tax relief works. So the first one there, John is single and earns €50,000 per annum. He decides to make an additional voluntary payment, or AVC, of €5,000 into his pension. That's just to boost his pension entitlement when he retires. Because John is single, his tax rate band is 40,000 per year. So in John's case, because his income, which is 50,000, exceeds his tax rate band of 40,000 by more than the pension contribution of 5,000, he gets the full tax relief at 40%. On the other hand, Jessica is single and earns 42,000. She makes an additional voluntary payment, also of €5,000 into her pension. And again, because she's single, her tax rate band is 40,000 for the year. And in Jessica's case, because her income, which is 42,000, exceeds her tax rate band of 40,000 by only 2,000, she gets 2,000 of the pension contribution at 40% and the balance of 3,000 at 20%. Just want to move on now to the USC, or Universal Social Charge. So again, this is a tax that's been around now for quite a while, but I suppose no harm to give some background guidance on how it's calculated and deducted. So USC is a tax payable on your total income, and that's very much unlike income tax in that in certain circumstances you may have some reliefs, tax reliefs against your income tax liability. However, USC is charged on your total income. And depending on your circumstances, you pay USC at standard or reduced rates. If your income for the year is below 13,000, you may be exempt from USC. On the other hand, if your income is above 13,000, and that could be only €13,001, you will pay USC on your full income. On screen here, you'll see the USC thresholds for the current and last year. And I just want to point out the changes from last year to this year. So the first change is that the second rate band has been widened from €10,908 in 2023 to €13,748 in 2024. In addition, the third rate has dropped from 4.5% to 4%. And they will make some slight differences to the amount of USC that you pay across a year. If you're age 70 or over, or hold a full medical card, and your income is €60,000 per annum or less, reduced rates of USC apply. And those reduced rates are 0.5% on the first 12,012 of your annual income and 2% on the balance. And you'll never pay more than 2% on your income if you hold a full medical card and your income is below the 60,000 per annum. Just want to move along now to some guidance on how PAYE employees are taxed. First of all, talking about the emergency base of tax in the USC. So the emergency tax and USC rates apply when your employer, having contacted revenue, doesn't receive a revenue payroll notification for you. You may ask, what is a revenue payroll notification? So the revenue payroll notification is the employer copy of your tax credits for the year. The revenue payroll notification, or RPN for short, shows your total tax credits, total USC and tax rate bands for the year. Now, emergency basis can happen when you have either A, not provided a valid PPSN to your employer when you started, or B, your PPSN is not registered on revenue records. And that will most likely happen when it's your first time employment in Ireland. If that is the case, your employer is authorised to deduct emergency tax under the normal emergency tax rules. And they are as follows. For the first 4 weeks of your employment, the employer will give you a tax rate band equivalent to 1/52nd of the single person tax rate band. Any income you have over that amount will be taxed at 40%. After the first 4 weeks, if you're still on emergency tax, tax will be calculated at 40% and USC at 8%. And the USC at 8% applies throughout. If you've not provided your employer with a PPS number, the employer will deduct tax at 40% and USC at 8% until such point as they receive an RPN for you. So it's very important that if you are on emergency tax, to ensure that you contact revenue to discuss why that might be the case and to make sure that you come off emergency tax as quickly as possible. How do you avoid paying emergency tax? So if it's your first time employment in Ireland, firstly, register for My Account. And secondly, register your first ever job in Ireland using the Jobs and Pensions facility in My Account. Every other job you have throughout the remainder of your working life, all you've got to do is give your PPSN to your employer as soon as you start work, and your employer will register your employment with revenue through the payroll process. You may have been on emergency tax for a number of weeks or even longer, and you then find that you receive a tax credit certificate on a week one basis. So what does week one basis means? I suppose the best way of describing it is week one basis is generally an interim measure between the emergency tax basis and the cumulative basis, which I'll discuss shortly. So there's a number of reasons why a person might be on a week one basis. But the basics of week one are as follows. Each week or pay period is treated separately. Your employer will deduct tax and USC on a week-to-week basis. Your tax credits are not backdated and do not accumulate. And when you're on a week one basis, your employer cannot make any refunds of income tax or USC to you. If you've been on a week one basis during the year and that continues right up to the end of the year, what you should do is submit an income tax return to revenue through My Account after the end of the year, and revenue will address any issues there in relation to the week one basis. And if you're due a refund, they will make that to you through your bank account or by check, whichever you choose. Some reasons for why a person might be on a week one basis. So the first one is where your previous employment is not ceased on revenue records. Secondly, where an individual's tax residence position is not determined. And that's important because your tax residence entitles you to certain tax credits and also determines what income you're taxed on. The person may have had certain gaps in their employment record, and it's not obvious what income they had during that period. It may be through the employee choice. The employee themselves may wish to be on a week one basis for reasons known to them and revenue only. The taxpayer may have had additional income that was previously untaxed. They may have had a large reduction in their tax credits, and that can typically happen where a person is claiming a tax credit, they're no longer entitled to it, they forget to inform revenue, and it only comes to light much later than it should. And then the last one there, which is quite common, where there's a transfer of tax credits between spouses and civil partners. And that would typically happen where initially you have both spouses or civil partners in employment, one of them leaves work for whatever reason, and the other spouse wants to gain the benefit of their tax credits and cut-off points. When that happens, we will transfer the tax credits and cut-off points to the other spouse, and we will do that on a week one basis. If you're on a week one basis, it's very important that you contact revenue for clarification as to why that may be and to address any issues that need to be addressed. Cumulative basis, which is the most common basis of taxation. And essentially what cumulative basis means is that each payday, all your earnings, tax credits, tax and USC bands are accumulated. And this ensures that the right amount of tax is paid each payday. And one of the benefits of cumulative basis is if you're entitled to a refund of tax and/or USC, that refund can be made by your employer when you're on a cumulative basis. Just now I want to talk a little bit about commencing and ceasing employments and who has responsibility for each of these items. So I've already said this, but just to reiterate, when the employee is taking up their first ever employment in Ireland, they must register on My Account and register their first ever job or pension in Ireland. Any subsequent employment or pension that that person has throughout their working life, the employer will advise revenue of all commencements and cessations through the payroll process. I'm now going to move to a very quick overview of My Account. But before I do so, I just want to highlight one of the most important aspects of this presentation, which is online security. We're all aware of the fact that fraud is more prevalent now than it ever has been. And your My Account access, it's very important that you protect that access. Don't divulge your PPSN or password to any person who doesn't have the right to have that information. Always remember that revenue will never send you any information through ordinary email. We ask that if you're contacting revenue to use the My Inquiries facility in My Account because it is safe and secure. And very importantly as well, if you have bank account details on your revenue record, please check them periodically to make sure that they're the most accurate and up-to-date bank account details for you, because it's quite common for refunds to be sent to the wrong bank account. And that can be an administrative nightmare for both yourself as the taxpayer and for revenue to secure the return of that refund. So always have a look just to make sure that the most up-to-date bank account details are there. Now, moving briefly into My Account. So you'll see highlighted on the top of the screen there, My Documents, My Profile and My Inquiries. And just very briefly what each of those are for. In the My Documents folder, every piece of correspondence that revenue has ever sent you while you're registered as a My Account user will be contained in My Documents. The oldest items that are in there will be in the archive folder in My Documents, but they will always be there. In My Profile, you can update your personal information, and that includes your contact details, your address, and your bank account details. And in My Inquiries, you can use that secure online contact facility to transact your business with revenue. So all contact can be done through My Inquiries. Then, just talking very briefly about the cards that you see on screen. So the first one there is PAYE services. And in there, a PAYE employee can manage their tax for the current tax year, and that means possibly transferring tax credits between spouses or between employments. You can review your tax for the previous 4 tax years, and I'll go into that in more detail shortly. And in there, you can also view or cease your job or pension. You can access the receipts tracker, amongst other items. To the right of that, you have property and land services, and in there you'll find guidance on how to manage your local property tax obligations, and the Help to Buy scheme is in there amongst other items. On the next two cards, you have vehicle services, and in there you'll find guidance on if, for example, you're considering importing a car from abroad. There's a VRT calculator there, which will give you some guidance on what that cost might be. To the right, you have the payments and repayments tab. If you ever have to make a payment to revenue, you can manage that process using that card. And the last two then are manage my record. In here, you can again access my inquiries, my documents. You can also update your civil status. And to the right of that, you've got gifts and inheritances. If you've been a beneficiary of a gift or an inheritance from an estate and you have a tax liability, you can manage the process of settling that tax liability using the gifts and inheritance card. Now, moving along to how to obtain your employment details summary. So as I said earlier, the employment details summary replaced the old form P60 from 2019 onwards. So the P60, very simply, was a summary of your pay and tax information for the previous tax year. And the EDS, or employment details summary, is a very similar type document. Revenue makes the EDS available to employees at the start of each year for the previous year. And the EDS is based on the pay and tax details submitted by your employer for the previous year. If you had more than one employment in the year, you will have separate EDS for each employment held. And in the same manner as the P60, you can use the EDS in support of a loan application, a mortgage grant, or DSP benefits. So you can use that EDS document to verify your income with a third party. So to access the document, when you're signed into My Account, select View Your Employment Details Summary EDS Documents under the PAYE Services card. On the next screen, you will see a list here for all of the previous tax years. And if you select the Create EDS button beside the year for which you want to create the EDS. Once you've done that, your pay and tax information will be summarized on screen. If you're a jointly assessed couple, the information for both spouses or civil partners will be on screen. You then click on Create Document to create the EDS, and this is what it looks like when you've done it. As I said, that document will then be saved in the My Documents folder in My Account, and because of the PDF, you'll be able to share it easily with third parties. Now, moving along to real-time credits. So, back during, I suppose, the early part of the pandemic, Revenue sat down to try and discover a number of new ways that we could provide for taxpayers to enable them claim their tax credits. And the biggest development in terms of that is the facility to claim certain tax credits in real time. So real-time credits allows you to claim for certain expenditure incurred in the current year, so in 2024. And that expenditure falls under the following headings: health expenses, non-routine dental expenses, nursing home expenses, and remote working relief. If you want to make a claim under real-time credits, you can claim for multiple receipts at the same time. You must upload a valid, readable receipt image for the qualifying expenditure incurred. And once you've made your claim, your tax credits will increase, which may result in you paying less tax. Your employer will then make the necessary adjustments through your payroll to enable you benefit from those increased tax credits. If you wish, you can still claim at the end of the year by completing an income tax return. On screen there, you'll see some guidance information, which is on the Revenue website in respect of real-time credits, if you want to have a look at that. But to make a claim under real-time credits, again, when you're logged into My Account, select Receipts Tracker on the PAYE Services card. On the next screen, click on Add a New Receipt. On this screen, you will be asked to enter certain information. So first one is the date the expense is paid. So for example, if you had a visit to the doctor yesterday, which was 30th of January, and you paid for that expense yesterday, you would enter the 30th of January as the date the expense is paid. You then select from the category, which in this case is health, and the subcategory of general. In the next section, enter the amount you paid. We will then ask you, are you expecting to or have you received a refund from a third party for this expense? And that's there typically to cover scenarios where, for example, as shown on screen there, the amount of the bill is €125. However, you may be entitled to a portion of that back from your health insurer. And if that's the case, you must tell us how much of a refund you're going to be getting. And that's important because you can only claim for amounts that are either not refunded by a third party or not refundable by a third party. Once you've made the appropriate selections there, upload your receipt by browsing your device for it and click Add Receipt to proceed. On the next screen, you'll have three options. I'm going to show you how to add another receipt under the category of remote working. So again, enter the date the expense is paid. So in this case, it's the 7th of January 2024. Select the category, which is remote working, and the subcategory, which is heating and electricity. Again, if you're a jointly assessed couple, you'll be able to allocate the tax relief to either spouse or civil partner. On the next screen, enter the total value of the bill, followed by the amount you paid. So for example, if you're living in shared accommodation, the bill may be €1,000, you may have paid €250. So in that case, you would enter €1,000, the total of the bill, and the amount paid of €250. Again, in the same manner as the health expenses, locate the receipt on your device and click Add Receipt to proceed. On the next screen, select Continue a Claim if you've uploaded all of your receipts at that point. If not, you just go back and add another receipt. On this screen, you will see a list of all the receipts that you've uploaded. Tick the Claim button to the right of each of the receipts that you wish to claim for. Once you've done that, tick the Claim Credit button. On the next screen, we will show you for the health expenses, the value of your claim and the amount by which your tax credits will increase. Click Next to proceed. On the following screen, under the Remote Working Relief category, we will ask you to enter the number of days you've worked remotely so far in 2024. We will ask you whether you're in receipt of a payment of up to €3.20 per day from your employer while working remotely. Select Yes or No as appropriate. The system will then calculate the gross relief due and the amount by which your tax credits will increase. Click on Next to proceed. We will ask you then, have you claimed all the credits you're entitled to? Select Yes to proceed. Have you declared all your additional incomes? Again, select Yes. On the next screen, a summary of the information you've entered will be presented. Once you've reviewed this, tick the Declaration button on the bottom right and select Sign and Submit. Enter your My Account password and click Sign and Submit. And once you've done that process, as I said, your tax credits will increase and you will get the benefit of the increased tax credits in 2024 through your payroll. Now, in the next section, I'm going to talk about the end of year process for employees. So this is traditionally when you come to the end of the year, you want to claim for all of the different credits you feel you're entitled to, such as health expenses, remote working, maybe tuition fees, etc. So log into My Account and select Review Your Tax 2020 to 2023 from the PAYE Services card. On the next screen, select the tax year for which you wish to submit an income tax return. Once you've made that selection, where you see Request highlighted on screen there, click on that. On the following screen, Revenue will present you with a preliminary result for the particular tax year. And that preliminary result will be based on the information A, submitted by your employer through the payroll process, and B, the tax credits and incomes that are already on record for you. And that is just the preliminary result. Once you've reviewed that information, click on Complete Your Income Tax Return. This is just a notice to file an income tax return. Click on OK to proceed. Before you begin, we will present you with some guidance information to assist you with completing the income tax return. Once you've reviewed that, click on Start. And this process is divided into 5 sections. In section 1, you will have the opportunity to update your personal information. So that may include your civil status may have changed in 2023, the number of dependent children, your tax residency situation, your contact details and bank account details can all be updated in here. Similarly, for your spouse or civil partner, you can also update that information there as well. In the next section, the PAYE income submitted to revenue on your behalf by your employer or employers will be shown on screen. Click on Next to proceed. In this section, you will have the opportunity to tell revenue of any income that you've not previously informed revenue of. So any income that's not currently shown in your revenue record that you may have received in 2023, you will have the opportunity to update that here. In the next section, you will have the opportunity to claim for the additional tax credits that you wish to claim for. So I'm going to show you the health expenses and remote working process. So under the health category, select health expenses. And in here, you will be asked to enter a number of different pieces of information. Firstly, enter the amount of any general health expenses not already claimed during the year. So any amount that you haven't made a claim for during the year, enter the total value of that there. In the second box, enter the amount of any non-routine dental expenses that you haven't already claimed during the year. In the third field, enter the amount of any refund received or receivable from a third party in respect of the first 2 fields. Once you've done all that, the system will calculate the gross amount of health expenses now claimed and the net amount which you're now claiming. Once you're happy with all the entries, click on Add. On this screen, you'll see how to claim remote working relief. So select the remote working relief from the Your Job category. And on screen here, you will see the receipts that you've uploaded using the receipts tracker. Once you're satisfied that you have all of the necessary information to proceed, we will first ask you whether you're in receipt of up to €3.20 per day from your employer. Select yes or no as appropriate. Enter the total value of heating and electricity paid by you, the total value of broadband paid by you, and the number of days you worked remotely in 2023. Very important when you're entering the number of days worked remotely, you must of course deduct any holidays, sick leave, or indeed any day that you weren't in work. Click on Add to proceed once you've made all the appropriate entries. Those tax credits will then populate your tax credits for the year. Tick the Confirm All button followed by Next. The information you've entered will be summarised on screen. And if you're happy with the entries made, tick the Declaration button on the bottom right and click on Next to proceed. Then enter your My Account password and select Sign and Submit. Now, if you wanted to make a claim for rent tax credit, so the rent tax credit is a new tax credit which is available to taxpayers who are living in rented accommodation for the tax years 2022 to 2025 inclusive. So this tax credit can be claimed where no other rent supports, such as the HAP scheme, rent supplement, or the RAS scheme are being provided. In addition, it cannot be claimed when the tenant and landlord are related, with one exception, which is that the property must be such that it has to be and is registered with the Residential Tenancies Board. Now, in the budget in 2023, the Minister for Finance announced an increase to the rent tax credit. So the credit amount has increased from €500 to €750 for single and widowed, and from €1,000 to €1,500 for married civil partners. And again, you'll find further information, including the claims process, at the link shown on screen. How do you make a claim? For 2022 and 2023, you make your claim on the income tax return. And for 2024, you claim by In My Account, selecting the Manage Your Tax option from the PAYE Services card. Click on Add New Credits. Select Rent Tax Credit from the You and Your Family category. Click on Next and answer the on-screen questions to make your claim. But just to show you how to make a claim in 2023, from the You and Your Family category, select Rent Tax Credit. And then there's a number of questions to complete. So the first question is, who are you claiming for? So we ask whether it's for self or child. So you can claim for yourself as the tenant, or if you have a child who is living in rented accommodation, maybe studying away from the family home, living in a different part of the country, you can claim for that child as well. Select the appropriate option and click Next to proceed. In the next section, we'll ask you whether you're in receipt of a HAP, RAS, or any other state housing support scheme. You must select No to proceed. Then we ask you to confirm that the landlord is not a government minister or a commissioner of public works who owns the property in an official capacity and is not a housing authority or housing association. And the reason why we ask that question is, if that does apply, you're not entitled to make a claim. So select Yes to proceed, followed by Next. On the next screen, enter the PPSN of the tenant. Tell us whether the property is an RTB registered property, and click Next to proceed. We then ask you, is the property under a license agreement, such as a rent-to-room scheme? Select Yes or No as appropriate, and tell us whether you're related to the landlord. Click on Next to proceed. We then ask you, is the property your principal private residence? So that is, your principal private residence is, generally speaking, where you live on a day-to-day basis. We will ask you for the start date of the tenancy and the estimated end date of the tenancy. Once you've made those entries, the system will calculate the length of your lease. Click on Next to proceed. Here we will ask you for the address of the property, including the area code and the LPT property ID, if you have that information. If you don't have that information, you will still be able to make a claim. Click on Next here to proceed. We will then ask you for the landlord's details. Once you've made the entries there, select Next. If an agent is acting on behalf of the landlord, an agent might be set up to collect the rent on behalf of the landlord. Tell us who that agent is. And once you've made that entry, enter the amount of rent paid. So the maximum amount you can claim for a single person for 2022 initially was 2,500. So that's now gone up in 2023. So the amount you can enter there is a maximum of 3,350 euro off the top of my head. I'll confirm that at the end of the presentation. And for a jointly assessed couple, it would be double that. Again, once you've made the appropriate entries, click on Add. The rent tax credit will then populate your tax credits for the year. If you have no further credits to claim, click on Confirm All, enter your My Account password, and select Sign and Submit. And then just to wrap up, just to tell you where you'll find some further information. So on the Revenue website, under the Life Events and Personal Circumstances, you'll find guidance in there under Starting and Changing Jobs. Guidance there for marital status, older persons, illness and injury, amongst other topics. Under the Jobs and Pensions link, you'll find information there on starting your first job, working remotely from home, your tax residence, and again, in addition to other topics. Under the Personal Tax Credits, Reliefs and Exemptions, in there you'll find guidance on the rent tax credit and the real-time credits, amongst other topics. Some guidance information here on screen. The first one there is guidance on how to register for My Account. The second one is some assistance on how to calculate your income tax. And the third one is access to the receipts tracker. And again, just very important to point out that the most secure means of contacting Revenue, if you have a query, is through the My Inquiries and My Account. That's it for me. I'm happy now to take any questions that you might have, and hopefully I'll be able to answer them. I'll just stop sharing and I'll stick on my camera so you can see what I look like.
Dennis, thank you very much. That was a lot of useful information, and I must apologise to you and the audience there for the delay in kickstarting. I think I figured out there it was a new Teams feature. that was my fault. So if anybody heard my frustration in the background, apologies. It was Teams and not directed at anybody personally. I think that was great. I think there's a lot there. I think the very first summary point, I think, is that for the employee to realise their ownership of all their details now, and not the payroll operator, that it must be them to control everything, which does give a lot of confidentiality now to details that they don't need to share with the operator. Could I ask you one thing, is just on the real-time credits, if the person was on a payment plan, does the payment plan take into effect, or is it just recording what the total was?
Okay, excellent question. All we were interested in terms of real-time credits and, say, remote working relief, all we're interested in the amount the claimant or taxpayer is paid. So whether they're on a payment plan or whether they're on prepaid power or whatever that may be, we're not remotely interested in that. What we're trying to do here is to make the process of making a claim as simple and straightforward as possible. So what do we ask from the claimant? We ask for a copy of the bill and tell us then the amount that you paid for that particular period. And that's all it is. We're not essentially asking for proof of the amount of payment, just a copy of the bill and what you tell us that you paid for that period. In some cases, we may verify claims at a point in the future. At that point, if there's further verification required, we will contact you directly and tell you what that verification may be.
Right, excellent. Now, thankfully, my children are not of an age that I'm paying their rent just yet. But what happens if they moved, for instance, to the UK and I was left with the burden of paying their rent over there? Is that applicable? Because I see your point there. Am I claiming for child or pair or myself? Is that applicable for claiming?
Unfortunately, not, Stephanie. The legislation specifies that the rental property must be within the state. So that is anywhere in the Republic of Ireland, unfortunately. And I think the Department of Finance, when they were putting together the legislation in relation to this, were quite specific on that.
Yeah, that's fine. Good to get it cleared up. Another one, sorry, these are mine just there. A lot of information I gathered from this. So, and I'm conscious that if people need to drop off, we've had these on the recording. The remote working 320 per day. And then we were recording some heating and broadband. Is it 320 plus some allowances for that heating or broadband, or is it the 320 based on the fact that we've had those expenses at home?
Well, just to clarify the 320 element, first of all, again, legislation provides that an employer can pay their employees up to €3.20 per day by virtue of the fact that they're working remotely. Now, that's entirely up to the employer. It's their choice. If they pay that €3.20 per day, that payment can be made tax-free, okay, to the employee, and that would be reflected in the employee payslip. What I'm talking about here is that the employee can still make a claim to revenue for the expenditure on their bills, so for their lighting and heat, for their broadband. However, any contribution made by the employer will be deducted from anything that revenue give you. That's
right. So it's combined effectively, so they can put in the heat and light, but the revenue are going to take into consideration that the 320 is also being paid to them. That makes sense.
That's a kind of a theme as well, Stephanie. It's probably a good opportunity to discuss this. A taxpayer can make a claim to revenue for expenditure that they have, be that health expenses expenditure or remote working or tuition fees. But the important thing to remember is you can only claim for amounts that have not been reimbursed to you by somebody else or that are not reimbursable to you by somebody else. And when I say reimbursable, that might cover a scenario where, say, for example, you have €500 worth of health expenses. But you haven't submitted your claim yet to your insurer for whatever they're going to repay you. So before you make your claim to revenue, make your claim to the health insurer. They will give you back whatever portion they're giving you back, and then you can claim from revenue for the balance.
Yeah, that makes sense. It's just to make sure that everything is declared. We're looking for this, but we have receipted something, whatever, whether it be health, whether it be the remote working, etc. That needs to be taken into consideration. I just got some coming in there. This regarding receipts, just say we paid on the 1st of the 12th, 22 for a course fee, which is related to 23. I'm not sure if there's enough information for you there. Might take that one offline and get some details, or does that make sense to you?
Well, just very briefly, if we're talking here on the topic of tuition fees, first of all, I suppose tuition fees, there's certain restrictions in terms of what you can claim for. So again, I direct people towards the website. That'll give guidance on what college courses you can actually claim for and what amounts you can claim for. So you'll also be aware of the fact that over the last year or so, the Minister for Education has provided certain subventions towards the cost of college education to a lot of people in the country. So again, keep in mind that you can only claim for an amount that has not been refunded to you or is not refundable to you by any other source. So when you arrive at that amount, there's then certain restrictions in terms of how much you can claim. So for example, for a person on a full-time college course, for the first student that you're claiming for, there is a disallowed amount of €7,000. Sorry, sorry, let me take that back, that's not correct. The maximum amount you can claim for your first student is €7,000, but there is a disallowed amount of €3,000 for full-time college courses and €1,500 for part-time college courses. So keep that in mind as well.
Right.
Again, I'd strongly urge people, and I suppose this, if people don't get any other advice out of this session other than this, before you wish to make a claim, have a look at the website first to make sure that you have an entitlement to that claim. If you're unsure about any item or any aspect of the claim at that point, come to us, have a chat with us, or make a submission through My Inquiries, and we will guide you through the process.
Through the specific ones there. And I think I'm just going to take a couple more. I think you have answered this one, but just to reiterate for Trish there, if a child is renting from an uncle while in college, can he claim rent relief? He is registered with the RTB. I think you did say that. Yes,
it has to be in the case where there is a connection between the landlord and the tenant, it must be an RTB registered property.
Okay, and I hate to touch on a bit of delicate ground here. What happens if the landlord is not registered with the RTB, which of course I'm sure there are very limited ones of those?
Well, we'd never contemplate a situation where a person will, either knowingly or unknowingly make a claim and not provide accurate information. But if the landlord is not registered with the RTB, if you believe, and with the best knowledge that you have, that you're making a claim based on the fact that they are, that then becomes an issue between revenue and the landlord.
Yeah, I would hope so.
Yeah.
Okay. And I think you did qualify. 750 was the new tax relief for 24, and 500 was for the rent relief, apologies, was for 23.
Yeah, just to point out something very important to that as well. Not alone did the Minister increase the rent tax credit for 2024 onwards, but he has backdated that increase. So if there's anybody online here who has already claimed the rent tax credit for 2022, 2023, and you would have received €500 as a single person, you are entitled to the additional €250 for either or both of those years. So if that's the case, submit a new income tax return for 2022 and or 2023 with the increased amount of rent paid on it, and we will give you the additional amount due.
Excellent. Well, that's amazing news. Actually, do you know what? It's funny you say that. I do remember that post when the budget was released, and actually I forgot all about it. And I think, Una, yes, an uncle is classed as a relative. I mean, once that's close enough, I think, to be a relative.
Yeah.
Just one, I think, I'm not sure if I answered this one. One last one there is at the end of year. So if I was doing if I understood this correctly, if I was doing the real-time credits, I'm doing it as I go. Do I still do my year end? Is that just for my sake, or I presume everything will be pre-populated if I've been doing it as I go?
Yeah, Very good question. I would strongly urge every taxpayer, irrespective of whether they've claimed the credits during the year or not, to submit an income tax return. And the reason for that is that that will allow for a balancing situation on your tax and USC for the year. Because where that's important is, in some instances, certain employers may deduct tax incorrectly. Something may have happened. Something may have happened with the payroll on a particular week. You may have been over deducted tax for a particular week and not actually know about it. So when you submit the income tax return, we will provide a statement of liability to you, and that statement of liability will be a reconciliation of your tax and USC position for the year. So regardless of whether you've claimed already during the year or not, by all means submit an income tax return at the end of the year.
Yeah, I think, as you just said, it's a balancing fact, something you may have forgotten as well, just in case that comes in, and it keeps everything nice and tidy. And I suppose in case you did claim anything laterally from health insurance, as a good example, then you could, I presume, get a chance to rectify it. And I think somebody just picked up on what we talked about there. I don't know the name, it's just under invoice. I already got my rent claim for 23, which is the 500, and can I get the rest of 250 if I didn't get it? Will they do the tax? Will they
just submit a new income tax return. Just submit a new income tax return for the particular year, and the additional relief will be granted at that point.
Yeah, and Gavin, there, no, you can backdate that 750, so the extra 250 there back for 2024. Dennis, I think we could talk all day again and again. I must apologise. This was not Dennis's fault. This was purely my my lack of the latest updates on Teams. But I think that was an excellent session. And judging by the feedback there, you will be invited back on again, and I will ensure we'll have a better start there. So thank you very much, and have a lovely day.
My pleasure, and thanks to everybody, yourself included, Stephanie. Thanks for everything.
Cheerio. Bye-bye.
Take care.